I think that you will see an expansion into the mainstream and a young group of people who are realizing the value in non-dollar denominated alternatives. And they look to silver all of a sudden as one of the best places to put your money.
Physical silver and gold in your hands, personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is our president, Andy Schectman. Andy, thank you so much for joining us today.
Thanks for having me, Elijah. Glad to be back. Glad it's Friday, too.
What I'd first like to discuss is the big decision by the Fed, or maybe the lack of decision. But it seems the talk we're hearing seems pretty inflationary, and then, in my opinion, good for the precious metals. But what Jerome Powell said is that we will continue to provide the economy the support that it needs for as long as it takes. So what is your initial reaction to that quote there?
Well, if we remember, the IMF not too long ago urged all the nations to spend, spend, spend. Janet Yellen said it's time to go big with interest rates where they are. We should be going big. What that basically tells me is that she's going to spend. She spends by issuing bonds, and Jerome Powell will be accommodating by buying those bonds. And the act of buying those bonds suppresses interest rates, drives them down, supports the bond market. But really what it tells me, Elijah, is that when you have a marriage of the Treasury and the Federal Reserve, a Treasury Secretary who was the head of the Federal Reserve, a Treasury Secretary who is echoing the sentiments of the International Monetary Fund to go big and spend, and a accommodating Federal Reserve chairman who says we will do what it takes indefinitely to keep the game going, or as long as it takes, that basically tells me we are approaching or have entered full modern monetary theory, where the Federal Reserve basically finances the workings of the U.S. government. And look, the Federal Reserve is backed into a hole. They have no choice but to accommodate. If interest rates rise, everything implodes. And that's just the real reality of it, that we have entered a period of time where not only has debt risen to highest levels ever, but also the markets have risen in a coordinated fashion to all-time bubble highs. When you see a stock and a bond market positively correlated, moving into all-time bubble territory and being positively correlated instead of inversely correlated as they normally were, as I've mentioned before, it used to be risk on, risk off. Stocks are risk on, bonds are risk off. They were inversely valued to one another. Now they are positively valued. And when you throw in the trifecta, the real estate market at all-time highs, all three of these markets would throw up if the Fed ever tried to normalize, as they call it, that's a fancy word, to normalize their balance sheet. Not going to happen. If interest rates rise above 3%, Elijah, the U.S. government will be spending more money on the interest on their $28 trillion debt, not even the unfunded liabilities, Medicare, Medicaid, Social Security, government and military pensions, et cetera, if they don't accommodate and continue to support the bond market, holding down the long end of the curve, call it yield control, yield curve control. If they don't do that, we'll be paying more money just in financing the interest on the debt, just the interest, than we take in all of the tax revenues across the board. And that's why you're going to see rising taxes. That's one of the things you're seeing coming out of this administration, rising taxes. So the bottom line is simply this. They have no choice but to be accommodating. And you remember in 2018 when they tried to normalize, as they call it, the balance sheet, the markets threw up. And since then, we have created more leverage and more compounding of the same problem without a cleansing of the system that has needed to happen for quite some time. So, Yeah, I think, I think anyone who would have expected any other rhetoric coming out of his mouth would have been lying to themselves or just not informed, because quite frankly, as far as I'm concerned, the mantra that the Federal Reserve has to live by right now is inflate or die. It's either inflate or default. There's no middle ground.
Now, Bill Gross, a billionaire, expects inflation will be around 3 to 4% in a few months, and this is from Markets Insider. What is your perspective on that? Do you think we could see inflation that high this year?
Yeah, well, I think inflation's already 2 times that. It's just that the numbers that we use to calculate inflation are bogus. The CPI is a bogus measurement of inflation, and it has been changed and massaged so many times to fit an agenda. Remember, the Federal Reserve's mantra is to keep inflation in check and to have full employment. Well, both of those numbers are crap. The Bureau of Labor Statistics puts out numbers that are disingenuous at best. The unemployment numbers are a joke, as are the inflation numbers. And ask John Williams about that. He'll tell you real quick that the inflationary numbers we're looking at are probably 8 or 9% or higher, and real unemployment is at least 3 or 4 or 5 times higher than what we are seeing. And that's how they keep the game going longer than it should. It's that we are being fed wrong information. Well, I mean, if you're just looking at the CPI, yeah, by all measurements, it certainly should be at least at 3%. Look, we've created so much money. The money spigot has just been going on and on and on. We've been lacking in velocity, okay? With the economy opening back up to a degree, we will see increased velocity. And when you see a Federal Reserve that will be accommodating to Treasury purchases, I expect more and more of this money to find its way off of the bank balance sheets in the reserve accounts at the Fed. And when that happens, that's when you see the velocity pick up and the inflation pick up. And heaven forbid we get a digital Fed currency down the road where the Fed can sidestep the lending of money into existence as it is right now. Then you'll see, massive inflation. But as it is right now, look, we have inflation. It's just in asset prices. The big money who, has been borrowing money at next to nothing cost-wise and investing it in assets that continue to move higher, you have a Fed that is supporting asset prices. If they stop, everything collapses. And so we have inflation. It's just not in the real world right now. It is found in asset prices. So, yeah, I think what he's saying is very true and very plausible. I just think it's understated considerably.
One of the things maybe to pose to our viewers to comment below is, what do you think inflation is right now? How is it impacting you? How are rising prices impacting you? What do you think the rate of inflation is? Now, one of the other topics I'd like to discuss is, how this is going to impact precious metals. I'm hearing from a lot of different people I've been interviewing that right now for silver is looking extremely bullish. And on a technical level, it looks like it could break out within the next couple months to $40, $50 or even higher. Does this seem plausible to you, and why?
It seemed plausible to me for a very long time. And I think that, again, is also arguably understated to where it ultimately could go. You have an asset that is unique to itself in that it is demanded both on the monetary side and on an industrial side. And normally I would tell you, Elijah, that, the investment side doesn't really move the needle anywhere near as much as the industrial side would. And especially when we look to a green new agenda, we've talked about this, the Chinese Belt Road and Rail Initiative, the largest human infrastructure project in history, connecting Asia and Africa. That's 65% of human population. And so it'll be far more than on an infrastructure basis in terms of roads and bridges and maritime channels. It will be digitally connecting those two continents as well. So the need for silver is completely expansive. But what you have right now is kind of an awakening and changing my way of looking at things a little bit, in that a massive awakening by the public all of a sudden. Now, this Reddit group who Miles Franklin has enjoyed a nice relationship with over the last few months, has done something that I never thought possible, Elijah. I would often wonder in the recesses of my mind if indeed, we were looking at an asset class that was fading away from view, in that it would always be important in terms of central bankers and in the recesses of the wealthy portfolios. But in terms of the general public, I wondered if precious metals was, a story from a bygone generation where, grandfather used to own those coins, but I don't have any need for them anymore. I just want cryptocurrencies, et cetera. And I wondered that for a long time. Someone who used to work for me, Andy Hoffman, who was very prolific in writing and in his views on cryptocurrencies, had me all but convinced that the younger generation was forgetting about precious metals. And it made me start to contemplate, geez, is this something that, could really happen? And not to say I ever fully believed it, but I understood the argument. And then all of a sudden, we see an expansion into the mainstream, and then the Reddit group, which is expanding into the millennial age people, and they're fantastic to talk to, and they're fantastic to work with, and they're engaging, and they're coordinating, and they're articulate, and they're smart, and I think they've been given a bad rap. They have given me increased and renewed vigor, Elijah. I think that you will see an expansion into the mainstream and a young group of people who are realizing the value in non-dollar denominated alternatives. And they look to silver all of a sudden as one of the best places to put your money. So I guess what I'm getting at is that you have a massive increase in investment demand and a whole new light shown upon the idea by a generation of people who have been forgotten as it pertains to precious metals until now. And so you put it together, you have an asset class that is depleting. It is every single year for the last several, we've run deficits. Last year, over 300 million. The year before that, over 200 million ounces short from supply versus demand. You have a depleted asset that is needed for infrastructure, that is needed for anything digital, that is needed for a Green New Agenda and for all the batteries and the solar power and all of these things it's needed for and growing while it's depleting. And now you have an accentuation in investment demand, coupled with yield curve control and monetary inflation. You couldn't ask for a better environment for silver. I mean, it's as good as it gets on every single level: supply, demand, potential uses. What's coming out of the ground in terms of its depletion. What's happening with the money supply, what's happening with yield curve control, on and on and on. And I think that you have, honestly, the buying opportunity of a generation. I mean that wholeheartedly. So, yeah, I think silver will go higher than people think possible.
Moving now to viewers' questions, Niall is wanting to know, I enjoy your interviews and watch them regularly, but a question keeps bothering me when I hear speakers say that the market is being held down by paper traders. Surely, if it is artificially suppressed, the producers are losing big money. Why don't they just withhold their product until the market finds fair value through price discovery?
Well, Keith Neumeyer did that before. Most of these mining companies don't have the funds to be able to do that. Most of them are finding, they have to sell what they're spending their money on to mine and to find, to explore and find, and they just don't have the ability to do it. But I'll be honest, that is a good question, and one that I've wondered about. That's one of the reasons I admire Keith Neumeyer so much, because he has stood up to the cartel, because he has talked about manipulation, because he has actually put his money where his mouth is and did withhold supply. But, it's like any business. You run a business, you have employees and costs and In the case of mining, you have huge costs of equipment and labor and, everything involved with mining and bringing the metal to market. You have to sell it to stay in business. Not all of these companies have the ability to withhold supply, but I will tell you that if that were to happen, and it should, if they really wanted to see a change in price, I would think it would be somewhat startling, the effect that it would have, because, if you just stop supply, we're already in deficits. Last 2 years, demand has been over 1.2, 1.3 billion ounces or more, and mine supply has only been 800,000 ounces. But here's probably the biggest reason that happens, Elijah, and that is that, remember, when we talk about primary silver miners, there are very few of them. 30% of all the silver that comes to the market comes from primary silver mining. Only 30%. That means the other 70% of the 800 million ounces, 560 million or more of it come from byproduct mining of other metals. And they're not interested in holding down or holding back supply when they're mining tin or copper. And so the point of it is that, yes, there are primary silver miners, and one of the big ones, First Majestic, did indeed hold back supply before. But the majority of all the supply that's coming to market is not done by primary silver miners. Of the 800 million ounces, roughly 240 million came from primary silver miners. So, it's a situation where the other miners, I would guess, probably don't have the incentive to hold it back the way that the primaries would. And I'm sure that has quite a bit to do with it. But you know what? If they all got together and did that, it might really behoove them pretty dang quick. And you could say the same thing for gold.
This viewer is wanting to know, when it comes to the price of silver, we're talking about how it could go, parabolic. There's a possibility of that, right? And Frank is wanting to know, what is your perspective on silver actually overtaking the price of gold? We talk about the gold-silver ratio, right? Silver being undervalued when compared to gold. But do you think in such a giant bubble, if we saw a huge parabolic move, silver could actually overtake the price of gold?
Well, I don't know about that. Maybe. I mean, people forget that in 1980, the Dow Jones was 850, and so was the price of gold. Would anyone think that the Dow and gold would ever meet ever again? I would say that they very well could. I guess all I will simply say to you is this, Elijah, and market fundamentals have a lot to do with this, but one of the absolutes that I learned in 30 years of business is that markets go higher to the upside than anyone ever thinks humanly possible, and to the downside more than anyone ever thinks possible. I have learned that. I have seen it with my own eyes on many occasions, no better than the Dow and the Nikkei. When I started in 1989, the Dow was 2,100, the Nikkei was 40,000, and, they flip-flopped. And no one would have seen either coming back then. So to me, the market movement is something that, bull markets will go higher than people ever think possible, and bear markets will fall further. So could it happen? Look, it's coming out of the ground at 8-1. That's spectacular when you realize it's priced at 67-1 right now. It's coming out of the ground at 8-1, and it's depleted. So could it? Silver has massive uses in industry, and those uses are, in many cases, irreplaceable. You must have silver to create many of the things that the consumers buy or products that are being made. So that's one of the differences between it and gold. And one of the unique characteristics of silver is that it's bracketed on either side by demand, industrially and also monetarily. So could it happen? Sure. 6,000 years worth of human wisdom tell us opposite, that, the combined wisdom of 6,000 years worth of experience tell us that gold should be 16 times more valuable, at least in terms of its geologic relationship from the beginning of time. That 16-1 is now 8-1 in real life. It's cut in half, yet the price is 67-1. I mean, every way you look at silver, it's screaming. It's as good of an opportunity as you will ever find. I will also caveat that by saying in this industry, very often logic and outcome have an inverse correlation, at least until they don't. And that's what drives people so crazy. They see the logic of this stuff, and yet the manipulation of the markets changes the outcome until it doesn't. I mean, I remember wondering if gold would ever get above 400. Seemed like every time it got to 400, it got knocked down. Same thing with 1,000. I guess it's just a matter of, in the end, mathematics and economics always win out. It just doesn't happen the way we would expect it to when you have a very large variable of government intervention and central bank intervention and commercial bank intervention. It's throwing manipulative variables into an equation that changes the timing and the clothes that the outcome is wearing. But ultimately, the outcome will come. And like I've always said, that little statement that in the end of the story, the little boy does see the wolf, and the wolf will come. We cannot hold it back by money creation and money printing and modern monetary theory. That's not going to work. All it will do in the end is exacerbate the price that we will have to pay. So could silver overtake gold? Yeah, absolutely. Will it? Maybe. Could it go 1-to-1 or better? Sure, possibly. I don't know if and when that happens, but even having that discussion and wondering if it's possible, I think underscores just the unique opportunity that silver presents.
All right. Well, Andy Schectman, we really appreciate your time today and answering, our viewers' questions. Before we let you go, if people are interested in calling us, they can call us at 1-800-822-8080 or email us at info@milesfranklin.com. Any last thoughts before we let you go, Andy?
Well, Elijah, I just appreciate, all these times that we've had to talk, and I will always look forward to our conversations and that with your father as well. These are really, really crazy, somewhat scary times, and just trying our best to get information out there, build our business at the same time. Of course, we want to sell precious metals. That's our business, but it's also something that I know you, as a man of principle, would not have anything to do with a company that was just trying to enrich themselves at the expense of the consumer. And I know that for a fact about you and your family. And, it's nice to be able to look yourself in the mirror and say, just for a moment, hey, maybe I'm making a difference in the world. And I tried to do that. I think we are. And I appreciate the opportunity to share my thoughts and yours with the public. So thank you for giving us a soapbox to stand on every week, and certainly look forward to picking up with you hopefully real soon.
Fantastic. Well, Andy Schectman, right back at you in all of that, and thank you so much for your time today.
Stay well, Elijah.